you. Thank you for your testimony. Secretary Mnuchin, I think there's wide agreement that your engagement in the PPP program made things largely better, right? The Treasury expertise in making sure that SBA could deliver on this in this really seminal program of the CARES Act. It's proven out because you got 4.5 million small businesses that have benefited from it. The average loan size is quite modest in the context of our economy, but the effect is pretty wide scale. So what would you say regarding the additional funds that are purposed for PPP? What should be our focus as policymakers on repurposing that $134 billion? How can we best do that? Is that the 7A program? Is that expedited loan programs? How do you see this fitting in, given the actions of Main Street and the other facilities you've stood up through the Fed?
Well, thank you, and I appreciate your comments. I think at the time when we passed the last CARES Act, the economy was in very difficult shape, and we needed to get money quickly. And as I'd said before, programs that took 3 or 4 months were not the focus. I think that there appears to be bipartisan support in the Senate to repurpose the $130 billion for PPP, extending it to businesses that are most hard hit, that have a requirement that their revenues have dropped significantly, things like restaurants and hotels and others, where it is critical to get people back to work.
Okay, and so that seems like a reasonable step in the right direction. Chairman Powell, the reputation you've garnered this year in particular is that your actions have been predictable and that you signal what you're going to do and you follow through on it. Transparent in that you lay out the metrics for action, you therefore follow those metrics. Incredible. One example is that at announcement, you said that you're going to support corporate bonds. And by saying that you're going to support corporate bonds, the market acted as if the Fed already had the program up and running, to the point where once you were up and running, people ask why you followed through on that program. Now, I think that's important to note. That transparency, that guidance, that communication has been effective in this opening stage in setting up these responses. So along those lines, the Fed took what I would call strong medicine in terms of action on the stress test to restrict dividends and buybacks and restraints on these large financial institutions. I would call that quite strong medicine. I think what we want to understand are the metrics that the Fed is going to use in order to make these judgments and assessments sort of in this next phase over the next couple of months for these large financials.
So I think you have to start with the sort of two major facts here. One is that the banking system is very strong, has been a source of strength. The banks have been taking on a wave of deposits. They've been engaging in forbearance. They've been making loans. So they're a source of strength in this situation, unlike the last crisis where they were a source of weakness. It's also a fact that things are highly uncertain. And so to preserve that strength, what we've done is we've stopped all share repurchases and we've stopped increases in dividends. So we're preserving the level of capital in the system. So to address the uncertainty and looking forward, we did run these 3 sensitivity analyses, and they were really to assess the overall strength of the system in the face of these downside cases. We found that the majority of firms were still adequately capitalized, sufficiently capitalized in all of those scenarios. Notwithstanding that, what we did was that we said for the first time in the history of these tests, we said that we're going to ask the banks to resubmit their capital plans. We're going to distribute scenarios, and we're going to look at the results again as we learn more about the path of the crisis. And in terms of the precise metrics we're going to be looking at, we'll be providing more clarity about that going forward.
But based off that uncertainty, you want to you're asserting as a regulator that you will actively review this to ensure that we don't have a financial crisis as a result of this health crisis.
Yes, we're going to keep monitoring this. We're learning so much every quarter And the path of the economy is highly uncertain. And you know, in our system, dividends are declared every quarter. We've already stopped the overwhelming majority of distributions. So we think that's the right place to be.
Thank you. Thanks for your leadership and effectiveness.